When we're looking at price and we're anticipating an exploration outside of the opening range gap, while underlying market is bullish. This is the part where you write shit down, folks, okay? Because if you don't record this stuff, you'll swear that I taught something new if you buy my book. Don't buy my books. I'm teaching everything for free, okay? But you'll see it in the book. But because you didn't take notes, because you didn't listen, because it didn't make sense to you at the time, because you're looking for something else, or you'll watch the video later on and swear I edited and added it to it, okay? But we're live streaming, so that can't happen. When there's an exploration below the opening range gap, that's this level here, from this price point here to this level. This low is Wednesday's 4:14 p.m. Eastern time settlement price for regular trading hours. Since we opened at 9 o'clock, the high of the gap is the 9:30 opening price. If we're looking for longer term higher prices, and that's where we're at, we're looking for all-time highs, it can explore below that opening range gap and go to a standard deviation of negative 0.5. And I mapped this out before we went down there. Now, the market overshot it a little bit, okay, and then started running back towards the opening range gap low, which I called for. And then I said, then it could trade to consequent encroachment of the opening range gap. Then it did that. It also touched that low of that pre-session fair value gap. Why did I pick this one? Well, if you look at what price was doing in here before we went into the opening range at 9:30, go back through this range, and where is a very prominent fair value gap? You have two of them. You have this one, and you have this one. Both of them were used during the price action. Here, here, here. And then eventually, once we made the low of the day, which is probably random, this was 1997 ICT. Okay? 1997, that's when I coined all this shit. So there's no books before this, and nothing came after until I started teaching it recently. So the market rallied up, went to consequent encroachment, and then while we were doing Trader Roundup, we were talking about things, that were pertaining to what was covered in the stream and other people's observations and whatnot. And the market was just gyrating around. Look at the bodies in here. And Benjamin, this is where you got hurt. They wicked it down in here, but the full mini contract didn't do that. But look at the bodies. Okay. They stayed inside that pre-session fair value gap. Right there. Okay. So this is time distortion, same thing. So if this is time distortion, you go up one time frame, go up to your 5-minute chart, go up to your 10-minute chart, and you'll see everything that pertains to this whole price action right there. But the bodies are telling you everything. The wicks are allowed to do the damage, and sometimes that hurts, I know. But here, the bodies are saying, no, we're staying inside what was already established as real order flow. No level 2 stuff, no Mickey Mouse bullshit, no concepts, no software programs to buy, no liquidity maps, heat maps, nothing. Just simply looking at the time and then looking at the open, high, low, and close. Okay. So we were in accumulation during this time distortion, and the market then leaves and trades up to 9:30 opening price, which I told you that was likely to pull back into. And then we had a minor buy side above that. And then the market rallied up. By the way, also, I had a event horizon level annotated, and for the life, man, just watch the stream. You'll see it. I don't want to make this longer than it needs to be. Everything was in the stream yesterday. So we traded up to opening price, and then look at the bodies respecting 9:30 opening price. Okay, that's algorithmic. This is not buying and selling pressure, dude. Okay, it's not. This is rigging. Okay, this is control of price. There is no dealer, because that's what market makers, you hear the word market maker outside of my community, you're listening to someone talk about or refer to themselves as an actual dealer, not a market maker. So when you start seeing these candlestick bodies reflecting around the times I'm telling you to look at, this is accumulation. It runs higher, creates a small little gap there at an old pool of liquidity. It trades down to it here with a fair value gap, then rallies higher, and it goes up to some absolutely random level. Like no one could have known that yesterday. No one. No one. What's the high of that? 26,562.75. You don't see anybody else talking about that. You don't see anything else but the truth coming from me. Okay. It's in live stream, folks. It's not cherry picked. And then look at the reaction off of that. All the way back down to regular trading hours, opening range, gap high, or 9:30 opening price. Okay. What's below that? Stops. The algorithm ran all the way back down for that. Right there. But they don't run your stops. It's a myth. So